markets turned from red into the green and hit new highs. New high, all-time high for the S&P 500 and new all-time high for the Dow Jones Industrial Average at this moment. That being said, let's continue our conversation. We bring in Rebecca Walser, President, Walser Wealth Management. Thank you for being here.
Thanks for having me.
So we always get, really excited for Fed Day because anything could happen, right? And there's that shh, like that lull on the floor where everybody really waits. Yeah. We got it. What do you think of what we got so far?
Well, actually, I think it's indicative that the market was almost thinking that they might get some really worrisome, like maybe we would cut or raise rather. And those raises made the market a little bit worrisome down today. And then the second they had a pause, we go to the upside and hit all-time highs, Nicole. So I think the market was bracing for what exactly would happen, although there was no chance of a cut today, I don't think. But, this really, to your point, Nicole, I think the fact that they came out and very quickly, and I can't wait for Powell's comments at 2:30, but they came out and very quickly highlighted the jobs, the strength of the labor market, the fact that the economy and the growth is advancing. In other words, what they're saying in a nutshell is these are not the financial conditions under which we normally cut, which begs the question and raises it to a higher macroeconomic conversation. Why would we cut? And the reason we would cut, Nicole, is because having rates this high for this fast after 15 years of lower for longer has basically made commercial real estate very susceptible to defaults, which would then impact the banking system. In other words, we are doing well with these hikes, but because of all of the assets that were financed for the last 15 years at such low levels, the Fed is being so pressured to cut. But these are not the conditions under which cuts would normally happen.
It's very interesting because, as I was saying earlier, I think in the last, in the beige book, right, and we get the minutes and all this, when we got the minutes from the last meeting, the talk was that they were being very careful. They didn't want to cut too soon. They didn't want to not raise if they had to. I mean, they had to do this with such a kid glove, and the credibility is on the line. And Powell is likely, he's saying how he's stepping down. He's not going to stay in this role. And if Trump is elected, he's certainly not likely to stay in the role. So it's a very touchy time because it's an election year. Also, still looking at the cuts. I mean, when they're still talking about 75 basis points, we're likely to still see 3 cuts. Labor for the end of the year, unemployment rate 4.0. versus 4.1%. So, they still see a very strong labor market.
Yeah.
The resiliency. I mean, but inflation's going in the right direction at least.
Yeah, it's going in the right direction, although we did get a hot CPI last week, and we certainly have a hot PPI even. So I think we're still getting, Nicole, unexpected strength and stickiness of inflation, and that the risk is very dire if they cut too early and then they have to reverse course. So, and barring some economic problem, I don't see a cut until June at the earliest, and there's even potential if we get another bad, inflationary read or anything, there's potential that it could be pushed back. And then you have all the, it's an election year, but let's just be honest, 8 out of the last 9 election years, we have had Fed policy changes. So I don't think that is as big of a concern as everyone else thinks.
Yeah. And you and I were talking before the show, and you were also looking at the comments from Christine Lagarde. Tell us a little bit about your interpretation of that.
Yeah, I was up really early and I watched her comments live, and I was actually quite surprised at how adamant she came across. She basically said, listen, even if we give 1 cut, that is in no way, Nicole, indicative of a subsequent cut the next month or the next month. That's not what it means. They said they're going to be very data dependent and looking at the data month by month so they can get the additional proof they need to actually establish that cuts are necessary.
Yeah. I mean, it could be one and done. But there's also this mantra that maybe what we will see from the Fed is that they won't do consecutive moves, subsequent moves. What they would do, and we've seen several meetings now with pauses, right? What, 5, give or take?
Since July.
So, right? So it's got to be at least 5. And that being said, maybe they'll do the 1 cut and then wait till the end of the year before they cut again.
It could be after the election.
Right, after the election. All right, so we'll leave it for right there, folks. So the Dow's up 127 points. We have a record all-time highs on the heels of this news, breaking news. Glad to have Rebecca Walser,